Hello and welcome back to the show. So today we are joined by a super special guest, Dale Willis, who is an experienced real estate developer and investor for more than 25 years. He is the founder of the Centra Companies and has overseen the development of over 1,500 homes across 50 plus different projects. So he has a lot of experience in the multifamily real estate development as well as the investing space. And today we're going to be talking about the benefits of investing in multifamily, as well as having Dale share some of his experience when it comes to being in the industry and working on so many projects, doing so many things, and having so much experience as well. But Dale, man, welcome to the show. I know you're busy, so appreciate you joining us here today.
Colby, thanks for having me. This will be a fun conversation.
Yeah, absolutely. I'm ready to dig right on in. But before we do that, I would love for you to be able to share a little bit about your background. You've clearly done a ton in the real estate space. So how did that all begin? From the start, and what took you from where you were in the beginning to where you are now?
Yeah, I've been involved in real estate in some fashion most of my life, except for a short hiatus that I took. When I was young in my early 20s, my wife and I had an opportunity. We moved to Las Vegas working in banking. So I did some mortgage banking there, as well as development and construction lending to builders and developers. And that's really where I got my first taste and really got really passionate about the industry. Um, from there, I ended up working. We ended up ultimately actually moving to Utah and spent several years there in Utah doing the same thing, working in banking, and had an opportunity. One of the developers I was working for asked me to come work for him, and we were a single family developer. We developed the property, sold the houses, and we grew that. He was doing 80 homes a year. We grew that to several hundred a year in a short period of time, and that was a lot of fun. From there, I had a unique opportunity. I went into retail. I had some Radio Shacks. A lot of people listening have probably never been in a Radio Shack because they've not existed for quite some time. And they just sell a lot of electronics and knickknacks that are related to the electronic industry. And that was a really good experience. I don't know that I want to be in retail again, but it was a good learning, growing experience. In the year 2000, we had the largest Radio Shack franchise in the world. And so we were producing a lot and learned a lot from that, and grateful that that's in my past. I love real estate, and retail is not something I'm passionate about. From there, ended up working for a company that created a city from scratch. And so we created our own the sewer company, the water company, designed all the roads, the golf course, where the commercial center, the apartments, the single family homes. And today, I think that city is somewhere between 40 and 50,000 population, is what it stands out today. In just a pretty short period of time, 25, 30 years, it grew to that. And so that was an amazing, fun experience. And then started my own home building company in Utah. Had that for a few years. We ended up selling, and a national player approached me and asked to come work for them. And so did a lot for them in the development world, real estate world, in different markets, and ultimately ended up moving to Minneapolis and working for them. And the market collapsed, as we know, in 2008. And I decided to go back out on my own. I'd been self-employed quite a bit and wanted to go back for my work for myself. When I shared that with a company, they said, "Well, if you're not there, we don't want to be there. Would you just buy our assets and we'll leave?" And so we negotiated that in 2010, started Centra Companies in 11. And from there, it was really, we focused on bank owned assets, whether it was, it's all assets they foreclosed on, but in some cases it was partially developed land, raw land that they took back, partially finished buildings, totally finished buildings that they didn't know what to do with. And that was really our focus for several years, was working with banks. We ended up working with multiple banks doing that. Then we had an opportunity. We ended up buying a portfolio of 450 properties, most of them being individual land. We took some of them and turned them into 150 lots or 70, 80 lots. And then we just started developing again. We were doing a lot of for sale housing, land development, And then value add. Mostly everything we do is where we're creating value. We don't buy a class A asset and sit on it. So it's value add, whether we're building something and selling it, or apartment complex that we buy, rehab it, put it in good condition, and reposition it. And for the last 3 years, we've really, no, I'd say more of the last 2 years, we've really been focused on for sale housing, just due to the market conditions of what we're seeing. We're not seeing a lot of opportunities currently in the multifamily, but we're keeping some dry powder because we see some real opportunities that are going to be coming very quickly in that front, and things that we're working on now. And we had the most exciting thing we're working on is we started a Centra Capital Partners, where we're allowing people to co-invest with us on deals. And that started about 2 years ago, meeting with one of our employees. We allow our employees to buy houses at cost, and they'll buy them at cost. They'll build up their own rental portfolio, and seeing the differences in their tax advantage versus our tax advantage, the way that's structured, they don't have the same opportunity to build wealth that I do as a self-employed. And so we decided, I want to do something about that. I'm trying to help them build wealth, but they're doing it so much slower because they don't have the advantages I have. And so that's how Centra Capital Partners came about. And then we said, well, let's take it one step further. We'll allow anybody to co-invest with us. So we launched that this year, that we allow people to invest in opportunities that we're chasing. And that brings us to current day. We do a lot of stuff in real estate and have fun doing it.
Yeah, that's awesome. And so you have quite a bit of experience, like we mentioned, and it's a lot of very interesting experience in real estate. You mentioned you developed an entire city from scratch, which is something I definitely, I definitely want to visit here in this episode. Kind of get your take on how that went and what went into that. But you brought up something pretty interesting, which is, kind of the way the market conditions are now. You guys are pivoting a little bit, but you guys are still preparing for, what's to come in the future as well, with more opportunities that you mentioned in multifamily. So what are some of the things, and then obviously, you have to share everything, right? If you wanted to keep some things close to the chest, you absolutely could. But what are some things that you guys are doing now in your companies as far as repositioning your capital, and what are you doing to prepare for, the months or years to come?
Specific to multifamily, as everybody exhaustively almost talks about, it's really tough with the interest rates where they're at. And so, I've got apartment complexes that are sitting at, hovering plus or minus 3%. And if I go build a complex next door that's a 7 plus or minus percent interest rate, my rents have to be significantly higher. And with the inflation, my cost to build a building today is significantly more than it was 3 years ago. So when you put that all together, rents have to be so much higher. And so, we just can't command those rents now. But what we are seeing in the market is, there's still a need. And so what's happening is people are still consolidating households, but there's going to be a point where, I can't live in that consolidated household and have the lifestyle I want because I'm having kids. I've added people to my household in whichever form it is. And so that's all of a sudden rents are going to get pushed. They're just going to have to go up. Well, that's going to happen. And a lot of people that are sitting on the sidelines waiting for interest rates to go down are going to be sitting for a long time potentially. And so we're preparing ourselves. We're looking at deals that we're getting ready to be able to start developing here soon, and deals that, a lot of people bought projects back in 2016, 17, 18, 19 that have balloon payments due. And those balloon payments are starting to come due, and those are having to be repositioned because, if I bought something at a 6% cap rate at 3% interest rate, well, that deal just doesn't perform anymore at a 7% interest rate. And so we're seeing opportunities that are coming as a result of that. And so we want to be ready to pounce on those, to reposition those, as well as new development, because there is a need. It's just not today, but it's coming very soon. And if we act the day that it comes, well, now we're going to miss out on a couple of years opportunity there.
Right, and that's a really good point that you kind of ended with there, which is, if you wait until, when everything is kicking back up, then you would have lost the years in order to prepare and actually develop the assets, right? So has that been something you've always done? Because you've been developing real estate, right? And development takes, definitely a ton of time. So is that something you've always done, is just try to not necessarily predict what the market's going to do in the next couple of years, but look at trends and take your actions today as far as, understanding what the trends are going to be in the future?
I think what's really important is, most of us don't know what's going to happen. We're in a unique circumstance. It's similar to things that happened in the late 70s and 80s, but every cycle is unique. Nobody could have predicted COVID and what that did to we all hunkered down and thought it was going to destroy the economy. And instead, we create terrible inflation as a result. And the perfect example is you look back in the 60s, interest rates were relatively low. And then in the 70s, they started climbing and they continued to climb. And a lot of people sat back and said, well, I'm going to wait for interest rates to come down because they're too high. I can't make any money. Well, guess what? They didn't come down until the 90s. And so, people sat on the sidelines waiting to make money and they lost out on how much wealth over that 20 plus year period. And I see we're in a similar situation to that. And that is a lot of people are sitting and waiting, but there's opportunities. We made a lot of money in 2010, 11, 12, 13, when a lot of people were waiting for the economy to recover. They were waiting. We just said, where is the opportunity? I think that's an important mindset that people need to look at. Is you'll find what you're looking for. And if you're finding high interest rates, you're finding a tough economy, that's exactly what you're going to find. But if you focus on where are the opportunities and go chase those opportunities, you're going to find them because every economy has an opportunity. You just need to really be looking for those opportunities and they'll present. I don't know what the market's going to do 2 years from now. Could we have another COVID? Could inflation really skyrocket on us? There's any number of things that could happen. And I don't know. And so we're just sitting here waiting and watching. Right now, we see huge opportunity in for sale housing. We're building houses. Everything we build on speculation, meaning we don't have a buyer. We don't even make it for sale until we start framing that house. Well, in the last year, 80% of our houses sell before they're finished. In the last 6 months, we've finished one house before it was sold. We had one house that finished before it was sold. And so we're seeing great opportunity in for sale housing, entry level housing right now. And we see opportunities coming on the apartments. We just don't want to do anything foolish. So we're just waiting and looking for the opportunity when it does present.
Yeah, and that's, it's a good mindset to have, right? If you're looking for opportunities, then that's what you're going to find. If you're looking for issues and problems, that's what you're going to find all the time as well. And you don't want to be the person who is stuck, right? Just doing nothing, waiting for things to kind of go their way, because the more you do that, the more things are not going to go your way because you're not being proactive, you're not looking for opportunities, and you're just looking at kind of what's wrong. And when things do kind of change a little bit, you're still looking at what's wrong with the new changes happening. Is that kind of what you would say as well, as far as the issues with people who are just looking at what's wrong and waiting and waiting and waiting?
Yeah, absolutely. That's exactly. I've learned that lesson. My wife and I, we moved to Las Vegas, and we didn't really love it. We focused on everything we hated about Las Vegas. In hindsight, I go, man, Vegas was a wonderful place. They've got a fantastic lake to recreate on. They've got hiking. They've got so many wonderful things. But we focused on what we didn't like, and the lesson we learned from it is that's what we found. We found everything we didn't like, but everywhere else we've lived, we've loved it because we decided, well, let's focus on what's there that we enjoy about that place and we'll find it. And Minneapolis is a great place that I can find all the things I don't like. The winters are really cold and the days are short, and I could go on, but instead we focus on the people are amazing, the recreational opportunities are fantastic, culturally diverse. There's so many things we love about living in Minneapolis. So that's what we focus on. I think that's just a true principle in every aspect of our life.
For sure. So, look for the things that you want, right? Look for the things that are going to make your life better. And something else that really comes to mind is, I really want to kind of know a little bit more about what you guys are doing as far as, mitigating the risks, right? Because there's always going to be risks when you are being proactive and you are taking advantage of opportunities. So what are some of the things that you guys are doing in order to mitigate risk? Because these projects, right, they're high in capital, they take a lot of time, there's a lot that goes into it. So when you do something, it's not always going to be 100% success, but how do we make sure that you're not doing anything foolish, right? Like we were talking about earlier.
Yeah, we actually apply this principle. A good friend of mine, Keith Cunningham, he's written several books. One of them is The Road Less Stupid, and I love his works. And Keith uses this principle. We apply this principle, and that is when we look at every deal, we say, what's the worst thing that can happen and what's the best thing that can happen? And if you don't have a pretty long list of what's the worst thing, that right there tells you to run. If you're so blinded by the upside of the opportunity, you're not seeing the downside because there's downside in every opportunity. I don't care what it is. If you're not seeing a downside, you're not looking at it with your eyes wide open. And so we make a list. We'll make a long list of here's all the reasons this thing's risky, why we shouldn't do it. Here's a list of all the reasons we should do it and why it's a great opportunity. And we look at it and we say, is the upside worth the downside? And can I live with the downside? And if the answer is no, there's the answer. Don't do the deal because there's risk all the time. There's risk of losing my time and energy. There's risk of losing financial resources, personnel. There's all kinds of risks in every deal. You just need to recognize them. That means you don't do the deal. It doesn't mean that you don't do the deal every time. It just means you need to be aware of it. And how do you look at each risk and try to mitigate it? Great example when we develop, we rarely will close on a property that we don't have fully entitled with a city. So if we're going to build an apartment complex, we're going to build a strip center, we're going to build housing, unless you're giving me a massive discount, we don't close on it until I know I can build what I want to build on that property. And so that's one of the ways we'll mitigate risk. Now, on the flip side, if somebody says, I'll I'll really discount it and give you a huge discount to close right away. Well, then we look at that as well and say, okay, what if we don't get the entitlements? What do I do with that property? What would be my alternatives? And so I just love Keith's principle there of applying that to every deal. It doesn't matter whether it's a real estate deal or whatever we do. We look at that.
Yeah, just knowing what's the worst that can possibly happen, right? And then when you know what that is, then you can really prepare for the worst, right? If you think about it that way, right? For lack of a better words. So
Yeah,
you're always
absolutely.
Yeah, so you're always preparing for, what can go wrong. And if you think about that in that mindset, that really kind of helps you be able to be more proactive, be able to take advantage of more opportunities and take more action as well. So, something I kind of wanted to get your take on was you've been a developer in many different spaces, right? You've developed, houses for sale, you've developed multifamilies. What would you say are the differences essentially between the two when you're from a development standpoint? Because there's a lot of investors out there who are, they're investing in both or one or the other. But from a developer standpoint, what are you seeing as far as opportunities go for both housing for sale, but also, apartment complexes and multifamily, which, a lot of people have quite a bit of enthusiasm for these days.
Yeah, the big difference is the amount of the check that you're writing out is your biggest difference. I could go in and do, for sale housing. It's a slow burn of the cash, and you're bringing cash in faster. And so, if I do a 100-unit apartment complex, I need to have all 100 units cash today. If I'm doing 100 houses, well, I can develop 25, 30 lots, sell those, build those houses, and I'm selling the houses as I'm building the next one. So it doesn't require nearly as much capital. From a strategic opportunity standpoint today, we're right now we only have for sale housing that we're offering to investors because that's where we see the opportunity today. It's we can take a project. I've got a project that's 105 units for sale. And the investment opportunity, people can invest between 100,000 and up to $2 million. Whereas that same project for apartments is going to require somebody, we're going to need to invest triple that minimum to be able to do that same opportunity. So it gives people a stronger IRR today than what the apartments would. And back to what we were talking about, it's just the interest rates right now make it a little trickier to make those things pencil. That doesn't mean they're not out there. And so, everybody's listening to this, go find deals because there's deals out there. I had a friend that just bought an apartment complex and he bought it at 50 cents on the dollar of what it sold for 3 years ago. And, he's going to make a lot of money on that because the seller soaked all the money he could out of that deal and ended up having about, I think it's about 70% occupancy. And so, between the interest rates and the 7% occupancy, that's a pretty great deal that he's going to go in and be able to repossession it and make a lot of money on that. And so when I say we're not doing any multifamily, that doesn't mean they're not out there. We're just not seeing the ones that we want to pull the trigger on today, but there are plenty out there, for all sizes.
Right. And it comes, when you guys are dealing with, investing in development, there's a lot of, resource allocation, right? Just because you guys are not allocating resources doesn't mean, somebody else shouldn't be allocating.
Absolutely.
that. Is that correct?
Yeah, absolutely. There are deals out there. You just need to look for what are you looking for today, and get word out there and start looking for them. You'll find them.
Yeah. Yeah, and something else that, I think I've heard quite a bit from other investors and developers as well who have done, a little bit of both as far as, investing and, flipping them and rehabbing them and also developing from the ground up. A lot of kind of what I've heard from people who've done both is that development is actually not easier, but better to do. Is that something that you would say as well, as far as investing versus development? That development is something that might be better bang for your buck, especially if you're willing to take on the risks and kind of the operation side of that as well.
Yeah, it really depends on the state that you're operating in. It depends on zoning regulations. Where you're at in Houston, the rules of the game are very different than in Minnesota or California or some of these other states. And so it really does vary, I think, depending on the state that you're in and what your zoning is. Cities that do have strict zoning, I might have a piece that's zoned for multifamily. Well, it could be really hard to do single family on that because they're like, well, that's not what we want here. And the inverse also holds true. So I think it really does depend on the region that you're in, because different cities have appetites for different things. And that can happen within the same area. I can go to one city and say, I want to do an apartment complex for workforce housing. And I can go to the same, the city with the same product next door city and get amazing pushback on that. And so it really does, depending on the government agencies you're having to deal with, in our opinion. And so it's hard to say that one's easier than the other. When you got an audience that's listening to us from all over the country, and it really is unique to each market.
Yeah, and if you were an investor, right? You were an investor who's just done, buying holes and fix and flips that kind of wanted to maybe move into development. What is your advice to those people? What is something that they should be looking out for that, between the difference between the two, what are some things that they might be doing in their investment business that they're not going to be doing in development, and that some things that they are going to be doing in development that they haven't been doing in the investment business?
Yeah, go in with your eyes wide open and surround yourself with the best, because there's so many risks. We've had deals where we went in and we did you've got, commonly you'll do what's called a phase one environmental study. And so that's the first steps of, is there any contamination here? Anything we need to worry about? And if they spot anything, then you go to a phase two and they dig deeper into those situations and testing soils, more involved and those kinds of things. Your wetlands, depending on what part of the country you're in, wetlands can be a big deal. Your soil, are they going to support a building? Are they going to support roads? And so you really want to make sure you got a really experienced team that's going to watch out for those, because even with that, you're not always going to find it. We had a project, we did everything we were supposed to, we did everything right. And we started digging to put a foundation in and found an old buried gas station that's 80 years old that nobody had any idea it was there. And that cost us a lot of money. The project was still very profitable. But those are the kinds of things you're going to run into those. But what you don't want is to have a rookie team around you when you're getting started, that they're not going to identify. Hey, another great example is we were under contract to buy, I think it was about 120 acres, and there was a golf course on that property. And we knew, once upon a time in the 70s, they'd use mercury to fertilize the greens. And we knew that. Well, what are we going to do about it? So we went in and tested that. And we found that, yes, we need the greens. But what we also found out is they used it in the fairways. So now all of a sudden we had what we thought was a limited amount of space that we needed to reclaim the soils to a massive amount of space. And we went back to the sellers and said, this doesn't work. We need to renegotiate. And they said, no. And we canceled the deal. But if it wasn't for our experience and the experience of those around us, that could have been a really costly mistake to get in there and then find out after we closed. And so I would say that's the most important, whether you're going into the investment side or whether you're going to the development side, is surround yourself with really amazing people. There's a recent book Ben Hardy wrote called Who Not How, that it really teaches that principle well. Is so often we focus on how am I going to get something done, whereas many times we're better off if we focus on who is going to help us get it done. I'm not an expert engineer. I'm not an expert soils guy. I'm not an expert at any of those things. And so we hire the very best of the best that really know and have experience there.
Yep. Yep. You can't do, when you're dealing with projects on this magnitude and this size, you can't, possibly think you can go do it yourself, right? And be the expert in everything. If you have the right team around you, that is the most important thing as far as being able to get something as that big of a magnitude done and doing it over and over again consistently as well. Which brings us to, I think it's time to talk about how you guys developed the entire city. So that's really interesting. So what went into that? How did you get into that project? And really, like, what does it mean to develop an entire city from scratch? Because I think there's a lot of people out there who don't even really know what that means and how that works.
Yeah, there's a lot that's really involved. Depending on the state, each state has different laws on, how do you incorporate a city, who has to live there, what services need to be offered. So it does vary from state to state on how you would do it. One of the most difficult things, and this is nationwide, is if you start a city, you have to do something with the sewage water. And I can't just reclaim the water and then kick it out into the local stream or into the local lake or wherever I'm putting it. There are discharge permits and there's a lot of hoops you have to jump through. And when this city was started, the decision makers all said, well, how are we going to do this? And there was a local farmer that owned a discharge permit. And so he was brought in on the deal as a partner because that solved part of the problem. And the interesting thing is, and so the same thing was with water. Okay, well, how are we going to get water? And so wells were put in, holding tanks were put in, all the system to put in, the water system was all created. And those two things were the most complex part of it in this particular thing is how do you create a water system for an entire city? How do we create a sewage system for an entire city? And so those two things were created as a form of necessity. Um, and there were other things, let's put in a golf course and you can have higher end lots around it, which is going to attract some affluent people. Where are you going to put the grocery stores? Where do you put the gas stations, the churches, the elementary schools, the apartment complexes? All of this, you've got to figure out, how are we going to arrange this and also make it flow well? To where it's just not pure chaos. And so that all had to be designed. The most interesting part of it is one of the aspects that were most profitable of creating the city was all the afterthoughts. And that was, in time, eventually the water company and the sewer company were sold back to the city. They bought them. And that was really ended up being the most profitable part of the entire deal, which was not intended, which goes back to, you got to be constantly looking for opportunity. Because early on, they would have been thrilled to say, hey, somebody want to take care of the water or the sewer for us? Would a neighboring city be willing to take care of the sewer and we tie into theirs? And that wasn't possible. And that would have been the ideal choice, but none of those were options. And so this was all created from scratch, and it started out slow. It took some time because, people are a little bit leery of something that's new and unproven. But you stick with anything in time and prove out the process, then there's a lot of opportunity. And all the neighboring farmers and everybody there is making a lot of money today as that city continues to grow.
That's awesome. So let's backpedal just a little bit here. Just kind of go 101 a little bit. So you mentioned you can incorporate a city. I know definitely that's something that I didn't, had no idea was even possible. I've done a little bit of research on this before, so I kind of understand very basic what that might mean. But for listeners who really have no idea what that means, what does it mean to incorporate a city? How are you guys structuring it where you can make money from that deal, right? Because in people's mind, right, cities are owned by the government, and that's the way it is. But there is a little bit where you can privately build the city like you guys have, and there's money to be made from it.
Yeah, it really does vary depending on the state because each state has different laws that govern how you do that. And so some states, you could do it as a simple township. Some states you can, initially start out similar to what a homeowners association would be, and then convert it eventually once you have enough of a population. Some, with very minimal population, you can incorporate it immediately. Now, in all cases, there's still a governing body. And so if you're a township or you're a city, there's still a governing body depending on the structure of that governing body, because that can vary as well. But you're going to have a mayor, you're going to have a city council, you're going to have planning commissions, those kinds of things. And so when you do that, you are running the risk of losing some control, because now all of a sudden you have elected officials that are telling you the direction of what your vision was. And so, you don't see cities start from scratch very often, but quite often you'll see it that people are doing it through associations. So they're doing it to where they control it and they still can have the governing vote through that association. An example on a smaller scale would be when we create a homeowners association for a community, we might have 100 homes in there. And, I don't want to use this as a scapegoat, but each state does have laws that govern this as well of how soon you have to turn it over. But you can take it and hold on to all of the control until you get 70, 80% built out. And so we go in, we do 100 lots. Well, we continue to have all the governing control, and we continue to decide what can be built, what can't be built, what people can have in their yards, what they can't have in their yards until we get to a certain point. And then most states have a law that you have to turn it over. But at that point, you've already set precedents. That is a way that some people can start a city, is on a larger scale, say, okay, we're going to develop several thousand, but until we get to the 80%, we're going to maintain that control. Because that's really, from an investment standpoint, that's your risk, is losing that control. And some homeowner coming in and saying, yeah, we really don't want apartments. Like, well, we plan to have apartments here and we need to do it. Whereas those associations can help you maintain that control for a period of time.
Yeah. So that's really interesting, right? Because people, they don't think about that, as far as, being able to build and develop a city from scratch that way. But it's funny how it works together, right? How you have, compared it to a homeowners association, and the way that you guys were able to, maintain certain amounts of control as far as building out the city. Because I'm sure, that wasn't an overnight thing. It took time, and as more things started to change, different ways of, how much control you guys had as far as governing also changed as well over time. And so that's a really interesting thing. I don't think a lot of people know that's even a business model. Would you say that's a pretty unique thing, or is that something you guys are maybe even looking to do more of in the future?
Starting new cities from scratch are extremely unique. They do not happen very often. They're pretty rare. It was loads of fun. It was really a fun thing to be part of, really exciting. One of the things I love about real estate is going back to something I was involved in 10 and 20 years ago. Say, that's pretty cool. We've got mature trees and kids are riding their bikes on the street, and people are living and thriving, and it's just a lot of fun. And so to go back, but it's pretty rare to start a city from scratch. It's very cash intensive. And it takes a lot of time and a lot of patience to get to the point where you're really getting a pretty good return on it.
Yeah, yeah, I'm sure, right? The larger scale of project, that, probably the more unique it is. But that's super interesting that you guys are able to do that. Now, as far as, moving forward, right? Do you guys have any other bigger plans, or are you guys mostly now focusing on, um, you know, being able to help other investors be part of your projects moving forward, whether it's single family, multifamily, or maybe even possibly another city in the future?
Well, with the start of Centra Capital Partners, the intent is we're really good at real estate. We love it. We're passionate about it. I'm super fortunate. I've got some of the best in the industry working with me, and they know how to execute. And so with Centra Capital Partners, the intent right now is to go into other markets that we're very familiar with, and replicate some of what we've done, whether it's strip centers or apartments or for sale housing. Go into these other markets and do the same thing. And by having the mechanism to raise capital, it's giving us the ability to go into more markets, and then it's also giving us the ability to allow others to create wealth alongside of us.
Yeah, That's awesome. So, no, man, thank you so much for being on the show today. You shared a ton of value and a lot of interesting stories about what you guys are able to do and continue to do in your companies and in your real estate business as well. So, for the people out there who want to know more about what you're doing, maybe who want to invest with you as well, what are some of the best ways for people to find you, to follow you, to be a part of the journey and potentially partner up with you in the future as well?
Yeah, one of our core focus as a company is we improve everything we touch. And that's literally whether it's somebody I'm working with, whether it's a project, whether it's my own house, whatever it is, we improve everything we touch. And and so, if I could be of support of anybody that's listening, reach out to me on LinkedIn. I'm Dale R. Wills on LinkedIn. I'm pretty active on there. If you're interested in some of our investment opportunities, go to centracapitalpartners.com. Centra with a C, centracapitalpartners.com. But yeah, we want to see everybody have fun in real estate, make a lot of money, and create good memories.
Yeah, that is awesome. And we'll make sure to leave that in the description, the show notes down below. So that way it's easy for people to find. But make sure to connect with Dale. I mean, if you listen to this whole episode, he's done some cool things in his real estate career. But no, man, I appreciate you so much for being on the show today again. Thank you. Before we let you go here, is there any last pieces of advice or tips you want to leave with our listeners here today?
Never stop learning. Always be learning. This is years ago when this came out, and I think with Audible this has changed. But once upon a time, the average person read one book every 7 years after they finished their formal education, which is a travesty, in my opinion. Continue to learn. Go on podcasts. This is a great example of a way to learn. Go on podcasts, listen to other people, broaden your horizon, read books. Just be a consumer of information, and that's how you really can advance your opportunities and careers, is broadening your thought process.
So, man, that's a great tip. So, Dale, thank you again for being on the show. Thank you for tuning in, and we will see you on the next show. Take
Thanks,
care.
Kobe.